It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, January 20th, 2016. Cruising our way through here this third full week of the month of January. Hope you're having a great week with us. Boy, oh boy, is this enough volatility for you? We saw a parabolic wedge on the S&P today. This is what we live for day trading, right? This is what we live for. Soak it up, guys. This has been an incredible kickstart 2016. Hope you're having a great week. I better hurry up. I got a jam-packed newsletter in store for you. Crude oil tonight, bearish in the long term, but a late session bullish correction has the buyers back in the game ahead of tomorrow's inventory report. And the most recent pullback gives us big clues, huge clues to where we're going tomorrow on the oil market. We got that inventory report tomorrow. It's going to sneak up on us fast. We got an important chart for crude, a nice looking chart for crude tonight. E-mini S&P is on a wild ride today. A parabolic wedge lower. Yeah, check. No need to adjust your television sets, kids. A parabolic wedge is not very common on the S&P 500. It's a liquid market. Anyways, parabolic wedge lower. That was immediately bought up this morning with a beautiful breakout pullback. 3 pushes higher before finally pulling back and giving us an excellent opportunity to go lower tomorrow morning with the proper trigger. Are the sellers going to take this back down to test the point of that wedge? Wait till you see this chart on the S&P. The gold is bullish. Yellow metal is bullish this evening. However, today's spike in channel ended just shy of the channel highs after 3 climactic pushes higher. This tells us the buyers are likely sitting on the sidelines until we see a correction early tomorrow morning, and sellers on gold right now have to be just drooling over a successful hold of the next pullback. I almost feel bad. I got to take my foot out of my mouth. I talked a lot of crap to gold last night. Apparently that flag was legit. We'll take a look at that gold in a second. On the euro, the 6E is bearish with a spike in channel and possible trading range this evening, which means we'll have to plan for multiple scenarios on the euro futures here tomorrow, focusing around the sellers holding the next pullback because we just tested the range lows at the end of the session today. I got a plan for you guys. Crude, E-mini S&P, gold, and the euro. This is going to be an exciting newsletter. I can barely contain myself. Before we jump into our charts though tonight, try to have some fun with you guys here a couple times every day. I want to remind you guys, make sure you're watching this video on our trading blog at sidewaysmarkets.com. If you're on our YouTube channel right now, look in the description of the video. You'll see a link over to our trading blog. A couple reasons why. First of all, I would love to give you a free pass, invite you to come out and join us in our live trade room for a couple days as a guest. Grab your free pass if you're not a member and you'd like to attend the trade room. Lower left-hand corner, right above my ugly mug, sorry about that, you can register for our nightly newsletter mailing list. I need your name, a real email address. Yeah, I'm looking at you, real email address, because I'm going to send you a verification email to make sure that I got the right email address. So check your inbox once you register. Right below the video tonight, you'll see a spot to download all the charts that you'll see me using in tonight's. I grew up in New England. What can I say? It comes out sometimes. Right? Click there to download those charts below the video tonight. Did I say go Patriots in the last video? Over on the right-hand side, you can, of course, register for our trial membership. You can learn more about what it means to be a member. And don't forget, I've always got someone standing by 24/7, 365 to answer your questions about charts, data, brokers, whatever incentives we got going on right now here at SOT. Don't forget, grab the right-hand side. Use that live support. All right, guys? Put your helmet on for this one. Seatbelts fastened. I got my driving gloves on this evening for our news. Let's jump in. Tomorrow, January 21st, Thursday edition here of our third full week of this month. As you can see, we get jobless claims at 8:30. We get that little Philly Fed at 8:30 a.m. And then we're going to hop, skip, and jump down to the petroleum status report at 11 o'clock. So ultimately, the major news tomorrow, jobless claims, it's a Red Star news report, but, jobless claims, people stopped paying attention to that report a few years ago. The JOLTS reports the jobs number of the year this year. Thank you, Janet Yellen. The Philly Fed survey, though, should be a pretty important one. We've been watching manufacturing slow down since last November. So I would imagine jobless claims will be somewhat important, but Philly Fed will be the headline number there at 8:30. And then, of course, if you're with me on crude, This is that highly anticipated inventory report that because Monday was a holiday, it was pushed back until Thursday, tomorrow morning at 11 a.m. Eastern Time. Honestly, I like it better like this because this allows me to trade all the way through till 10:45. If the number's on Wednesday at 10:30, you pretty much got to trade around it, so you almost miss a full 45 minutes of the morning session. And remember, the best time to be trading is during that overlap between London and U.S. That's 7 a.m. until 11:30 a.m. Eastern Standard Time. That's the sweet spot. So having this news number for crude traders tomorrow at 11 o'clock, we will be sitting on them hands from 10:45, right, 15 minutes ahead. And then I usually give it about 15 minutes afterwards. It's always a little bit of a variable how long it's going to take afterwards before that crazy beast, right, stops whipping around. So just be aware of that. Tomorrow morning, 8:30 news. Set a 5-minute reminder. Avoid that news tomorrow. But again, most traders will be watching that inventory report at 11 o'clock tomorrow. Remember, I'm not a trader for news. I'm not trading news. Too much volatility, not enough liquidity. It's gambling in my point of view. I'm going to be focused tomorrow morning at getting into positions ahead of that 10:45 kind of cutoff. And then it's really difficult to hold a position through the news because, as you've probably noticed, it tends to whip around a little bit. So do your best. I always tell people I love trading the oil markets. It's very, very good to us. It has been for over a decade now. This is the only speed bump during the week. We got to trade around this news report. It's the only thing. Every market's got this little thing. This is the little thing for crude, right? This is a little thing. It's more than a little thing. All right, so now you know the plan for tomorrow. And again, we'll be navigating around that inventory report tomorrow morning live in real time. So trade room opens up at 8 a.m. Eastern Time. Oh boy. I better take a deep breath for this one. A lot going on right now. Let's start off with crude. Crude oil is bearish in the long term, but a late session bullish correction has the buyers back in the game ahead of tomorrow's inventory report. And the most recent pullback gives us a big clue for where we go tomorrow. Basically, the sellers took control early in the session. They completed their targets before the buyers grabbed control after lunch and pushed price higher 3 times. Remember, the magic number in price action is 3 before 4:30 p.m. API came out. And of course, now we have this deep pullback. Yeah, this is my definition of deep pullback, right? 1, 2, 3 full-bodied red candles. You got to be a little bit spooked if you're a buyer off of that, and that definitely tells me that what's coming next is going to give us a lot of very important information, right? So that deep pullback off the highs, that tells us that the buyers need to hold this pullback for them to have a chance at hitting targets up above at 29.60, 29.78, and of course that big old round number of $30 a barrel ahead of news at 11 a.m. Eastern Time tomorrow. So if the buyers can hold this pullback, then we're looking at an A, B, C, D, up around that $30 a barrel for tomorrow. And a lot of times what happens is we build into a report before the news comes out tomorrow, 11 o'clock, almost as if just to put this thing right on a nice tee for the sellers, right, to smack it back down lower. So look for that to lead up tomorrow if they hold this pullback. Now, obviously, if the bulls can't hold this pullback, the sellers are going to attack this market. They should be used to it by now, and they'll try to push down to targets at 27.89, 27.56, and of course 26.93. Targets looking lower. We've got targets at 27.89, right? That little trigger zone there, a little bit of congestion back here. That'll be a magnet for those sellers. That'll be your easy money target for the sellers. The next one, of course, will be that low at 27.56, and then, oh my goodness, look at this huge measured move potential now. Oh my goodness, $27 a barrel. I can't deny it. It's what the chart tells me, right? 27 it is. So we got, again, 26.93, $27 a barrel. The big variable, obviously, is the news tomorrow. So we will sit on hands from 10:45 to 11:15, let that news volatility pass, and then look to finish the session afterwards. Again, I like to get into my trades before 10:45 tomorrow. That way I don't have to worry about that news, right, and having to make my money after the news. So bottom line, what if price goes higher? What if price goes lower, right? If price goes higher, buyers are looking to hold pullbacks up to that high. You've got targets of major resistance, measured move, big round number. If we hold the first pullback, you should see the continuation at least back up to that high, and then from there we're going to look and see if they can keep holding right on the way up ahead of that measured move, and of course that major resistance. If they fail to hold this pullback, you know we're going to have a lot of buyers with their stop losses sitting below that 28.18, 28.15 area. That's what sellers are looking for right now. The best scenario right now would be looking for buyers to try to run this up and then see a nice reversal candle off it, right? That'll get the sellers interested because they know now where those stops are going to be. They'll be hanging out right below the low. I would imagine a lot of long-term bulls or medium-term bulls are holding this trade right now into this pullback. I can't imagine a lot of buyers bought this. I would imagine that it was profit taking from those sellers, right? I would imagine the sellers who were net short, they would have held through this, but if it pushed higher here, I would have liquidated my position. I trade earlier in the session, so like I said, I get to it early. But I would imagine that big run up was not buyers entering into new trades. I would imagine it was sellers, of course, covering their shorts. And that would explain now why it collapses back down. Are the buyers going to hold it? If they will, they're going to make a run back to that high and possibly up to that measured move ahead of tomorrow's news. If they can't hold it, yeah, you know what we're looking for here. Looking for that test of that zone below, the low of day today, and then, oh my goodness. I wonder, what do you think? Are we going to be back are we going to be seeing 27s tomorrow night? What do you think? Leave me a comment below the video. Drop me a line at JJ at School of Trade. I'd love to know what your feedback is for all this good stuff. And, of course, don't forget to share with a friend. Now you get a plan for inventories tomorrow. You get a plan for the crude. Let's keep going. Let's keep going. The chart of the night. S&P. Handsome. I mean, this thing is all ready for the ball. This thing is wrapped up with a nice bow at the top. What a beautiful chart. Gorgeous. We haven't seen the S&P look like this in, well, I've been trading for 15 years now. This is the best S&P market I've ever seen. I haven't seen it like this before. Incredible volume, incredible volatility. We have traders in our chat room right now taking over 10 trades a day on the S&P. I know. I wouldn't believe it. I didn't see it with my own two eyes. Okay, E-mini S&P is on a wild ride today. That's a parabolic wedge. By the way, what is a parabolic wedge? A parabolic wedge is a wedge with 3 pushes. 1, 2, 3, where the pushes actually get steeper, right? That's what the term parabolic means. It means as it increases, it gets steeper, right? So the move's going down, and as it's finishing, it kind of increases the slope of that move down, right? This is a buyer's dream when you see a 3-push parabolic move. And look at that, just tasty. I mean, gorgeous. This is what textbooks are made of. This is a textbook breakout pullback right back to the high of the wedge. The only thing that would have made, I was a little bit disappointed. I was a little bit disappointed to see the sellers didn't get just completely screwed at that low. This is the S&P, one of the most vindictive markets you'll ever trade. That's why I tell my new students out there, save the S&P for when you're making consistent money on euro or crude oil. Those are much easier for a new trader. The S&P will make you pay, right? If you sell that low, usually what would happen is you see the S&P make a 2 or 3 tick low, and then shoot back up, breakout, pull back, right, and it's gone. Almost as if to give you a little, you know what on the way going higher, right? So I was a little bit disappointed to see the double bottom there, but the double bottom obviously reacted bullishly, breakout, pull back. And that's the way you want to trade that type of parabolic wedge. That's exactly what you want to be looking for. Breakout, pull back, right into the point of it. See a nice, strong green candle. I mean, what more do you want than that, right? Just beautiful gift for the buyers here this afternoon on the S&P. Okay, so a parabolic wedge lower that was immediately bought up, right, with 3 pushes higher before finally pulling back and giving us an excellent opportunity to go lower tomorrow morning with the proper trigger, right? Sellers took control early in the session. They gave us 3 legs down, parabolic wedge before a beautiful breakout pullback to get long with now 3 pushes higher. Remember, first push is the market makers, second push is the trend followers, third push are all the late adopters, like the guy like me who just bought their first iPhone, right? Those late adopters, getting in too late, right? Sloppy seconds, whatever you want to describe it. Okay, so parabolic wedge, beautiful breakout pullback, 3 pushes higher from the buyers. We overshoot the channel highs and now overcorrect on the opposite side, right? So overshoot the highs, overcorrect on the opposite side. Everything's looking pretty good here, right? Everything's looking pretty good. Now, this climactic overshoot tells us the sellers are just simply waiting for these buyers to fail so they can continue this bloodbath back down to the targets at 1840, right? 1818 and maybe 1800 by the time we're recording this video tomorrow night. If the bulls can hold this pullback, we will look for a possible third measured leg back to the high. It's extremely rare. We got one today on crude, right? We got a multi-day third measured leg down on crude. Very rare to see 3 symmetrical legs after 3 pushes higher, right? It's going to take a lot of blind bullishness right now, probably being fueled by something else tomorrow morning, maybe some news at 8:30, right? We'll see what happens. So we have that 3 push down, parabolic wedge, sends us higher, overshoot, undershoot. Let's play that game. What if price goes higher? What if price goes lower, right? If price goes higher, the buyers will have held this pullback. I always like to see the first pullback hold and then enter on the next one. That one's going to be the more reliable trade. And of course, that's going to complete that major resistance target up at 1873. And then you're looking at 1, 2, and 3. Now, what's the difference here, right? What's the difference? I'm talking about a 3 push move. This is very common. We've got 1 push higher, 2 pushes higher, 3 pushes higher to complete a measured move. This is common, right? Measured moves completed with 3 pushes. What is not common is to see a 4th push that completes a 3rd symmetrical leg, right? A to B, C to D, E to F. Just because at this point now, most buyers have taken their profit because they've seen this before. They know they get the overshoot. If I'm looking at the S&P right now, I see that as being nothing but climactic overshoot. The buyers now completely take their profit here and they look for a 2-legged correction. That's the way I would trade it. 2-legged correction before looking for those sellers to fail and buying it again, right? Just my own personal preference. But again, maybe I'm missing something. Maybe the bulls are stronger. And so now, of course, if they do hold this pullback, look for that next one to hold, and that should give you the green light. You've got resistance overhead. That's a big target. Yesterday's close, still not tested yet, 73.75, and then 85. The 85, now that's going to be the S&P that we've grown to love, right? Trying to make a run just to get everybody nervous up around those highs from today's session. Now, what if we fail here? You have to assume that's what most of the buyers are expecting, right? They're expecting a 2-legged correction back into this little cluster of support here, and then we look for sellers to fail, right, and buy it back up after that nice deep correction. Again, if we can't hold this pullback, where do you think all these late adopters are? There's a lot of buyers here that say, whoa, this looks really bullish. Let's buy this pullback. So where's their stops? Their stops can be right there. So if we see this thing fail, it shouldn't take much to get down into this range. What was very interesting is that if you look left on this, you'll notice, I was looking left, see that, you'll notice a lot of chop and slop here in this area in that parabolic wedge. That's going to be a definite magnet for price, that 1840. Then we get back in, we're looking for retracements to hold. Moving average comes over, break down, hold, 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 and we're looking for targets, again, back into the range, back into the zone, and of course, back to those lows from today. New higher high in the short term tells us look for that buyer breakout pullback, for the buyers to have this up to that high again. Just be careful up at those highs, right? Be careful up at those highs. You want to see those pullbacks continue to hold. If it's going to have the strength to finish off that triple leg up. Again, very, very rare. And if we can't, we know where those buyers are going to fail, into that magnet, into the zone, and then down to 1800 tomorrow. You get the plan here for the S&P 500. Let's keep going. Now, I have to say, I really don't like the taste of my foot right about now here on the gold. The gold just laughing at me right now. Remember this yesterday? Remember this last night? I know I was talking a little bit of smack to this thing last night. Let's go left here a little bit. I don't do this very often. Remember, the more recent the data is, the more reliable it is. This is a great example. Remember we were talking about this last night? I was talking a little bit of smack about this being the laziest, right, bull flag we've ever seen. Well, sure enough, it says, who you calling lazy, man? Takes off to the upside, completes the measured move, but you'll notice here, failed to complete the channel rotation. Now, once again, kids at home, do not put as much emphasis on a multi-day move like this. Put a lot more emphasis on today's price action. Remember, you're trading with, this is the futures markets we're talking about. This is not the equity markets. Traders are not buying value with this, right? This is used for hedging. Very, very few people use futures for long-term trades. What am I getting at here? What I'm getting at is most traders are looking at the last hour. They're not looking at the last week. Okay, so stop taking the easy route and saying, well, the daily chart is giving me a double top. Forget the daily chart. You're a day trader. If you want to be a long-term trader, this is the wrong type of market for you. The futures markets are not for long-term investors. They're for hedgers, right? That's what the point of the futures market. That's why this rollover, right? Get a history book for crying out. Anyways, let's keep going. So gold is bullish. However, today's spike in channel ended just shy of those channel highs after 3 climactic pushes higher. Apparently, I like that word climactic today. Anyways, so we got 3 pushes higher. 1, 2, 3. There's a bull spike in channel that barely reached, right? We barely missed the high of that long-term channel. Okay, what does that tell me? What does that tell me? Well, that tells me that the buyers most likely took their profit right at that measured move and didn't even think twice. You can see the sellers completely taking it lower afterwards, probably on profit taking. And when you combine that with a bullish spike in channel, that's exactly what's going on right now. Remember the spike in channel. This is why it's important to watch the newsletter every night, because I teach a little bit more every night. What's the deal with a spike in channel? A spike in channel is a strength pattern, and spike in channels are extremely important that you understand how to properly trade these. First of all, the first component to a spike in channel is the spike. The spike gets the big money in the market. Okay? What do you think makes the spike? You and I don't make the spike. Right? The spike is caused by the elephants in the room, right? The big whales, the big account, either proprietary traders or they are asset managers hedging for their clients, right? So the spike up, the vast majority of professionals are in this move already. Then what happens is you have the second component. And the second component is what I call the lazy channel. In fact, it's disturbingly lazy. Right? It fools you a little bit. It's so lazy. It's such a lazy channel. Why is it lazy? Because the big money's already in this move. Right? The big money is just waiting for the measured move to complete. They can take their profit. The lazy channel, though, fools a lot of new traders. It used to fool me for almost a decade. I'm joking, but it fooled me for quite a while until I finally figured out, oh, what creates a spike? The big money creates a spike. The lazy channel is a bunch of retail traders trying to buy the low of that channel, right? So you're buying the low, you're buying the low, you're buying the low. Well, here's what happens. Once we get the measured move completed, the market tends to sell off. Why? Profit taking, right? The small money takes their profit and the big money takes their profit. This is where it gets confusing. That big move lower usually goes back to the base of the channel. And it usually happens pretty quick because it's profit taking. And what typically happens, at least it did to me, was it made me think, wow, that market was really slow. Now it's really fast. We must be reversing. And so what happens is you try to sell that next retracement, and you know where this story goes, and it says, no, we're still bullish. See ya. And it goes right back up. The big money starts to move. It's a strength move. The little guys and gals, no offense, I'm one of them too, right? We're buying the lows of that channel. We see the measured move completed. Profit taking sends it lower. The rookies and the retail traders who are unfamiliar with this, they think this is a bearish market. It goes just low enough to make you think, maybe the bulls failed. You take that next trade short. Those buyers know exactly where your stops are, and they're waiting for you to fail to now make a larger measured move. Okay? Now you got the 101 on a spiking channel. So here's a spiking channel. There's your spike. There's your channel. We complete the measured move in a lot of different scenarios here. And of course, undershoot the high, and we collapse off that high. Pretty much exactly what you'd expect right now, right? That's what you'd expect. Now, the bulls had control with these 3 pushes into a major measured move this morning, but we can see it fell short of completing the channel rotation. This tells us the sellers will be looking to send this price back to channel lows, but the bulls will see this as unfinished business and will be looking for the sellers to fail at the moving average for a shot to send this back at the high. Let's play that game. What if price goes higher? What if price goes lower? First of all, we expect at this point price to go higher. I expect the market's inertia to pull this thing higher. Again, don't underestimate how ridiculous people are where they go, it's bullish, let's just buy this, right? Don't underestimate that. That's why trading counter trend is so difficult, right? You might know where it's going to go next, but the vast majority of the trend followers don't see that. And they go in with a sledgehammer and they say, buy pullback, buy pullback, buy pullback. So if you're going to buy this right now, again, I would expect buyers are going to buy this. I would expect the bulls are going to try to keep sending this higher. Remember, we have a chance here now to go all the way back to that 1090 area, right, for the correction, for that spiking channel. That's the correction zone. So this thing could easily go all the way back down before even violating this spiking channel and then come back up. Again, the bulls are drooling over a buying opportunity down at those lows right now. It fits perfectly. So if I'm a bull right now, that's what I'm looking for. I'm hoping this thing collapses so I can buy it at 92, 93, 94 after I see the correction. Let's play that game. What if price goes higher? Price goes higher. If they hold that moving average, sellers are now looking short down to that spike in channel target. That's your big area for tomorrow for sellers. Okay? Then we've got to take our profit, sit on those hands, and wait and see what happens. Right? So if we hold that moving average, sellers will see that as a failure and they will attack. Targets are waiting for you below at the zone, at the channel low. Really, though, the big target is down at that spike in channel. Once we get down there, then we look for the sellers to fail and we look to buy that low. Capiche? Again, this is just textbook spike in channel action. That's all it is. This is nothing special. Now, what if they fail to hold that pullback? Because that's a viable option. Remember, this market is steamrolling higher right now, right? There's a good chance that they fail to hold that pullback. Well, remember, we have unfinished business up here. Now, given it is unlikely, but remember, there's a lot of buyers coming in just going, buy pullback, right? So they're going to buy this here, and if it fails, it's going to want to make a run to finish the job up at that high. Now, if we finish the job, then we have a double press high of a channel. Ever seen what happens with a double press high of a channel? We usually get a big correction to it. Channel rotation, channel rotation, channel rotation, double press high, big correction. A double press high at the top of a bull channel is seen as a signed, sealed, and delivered, just a singing telegram gift from the gods for the bulls. They see that as a chance to make a little bit more money, and they're done. So it usually results, bears see it, bulls take their profit. So if we do go back higher, that becomes a double press high. Be very careful buying after a double press high. All right, guys? So bottom line is, this next pullback is going to be really, really important, right? If they hold it, we look for a test of that low before we look for seller failure to buy it back up. If they can't hold it here, we expect it to make a run back for a double press high, and that should be about it for the buyers. We'll have to wait and see what it looks like at that point in time. Speaking of time, I am running late on time right now. Wrapping up here with the euro. The euro is bearish with a spike in channel and possible trading range this evening, which means we will be planning for multiple scenarios tomorrow focused around the sellers holding the next pullback after testing the range lows at the end of this session. I think a lot of traders will have different opinions about this chart tonight, which is why patience and proof will be the key to profits tomorrow. See what I did right there? Now, sellers have the bias, but the test of the range lows tells us that if the bears fail to hold this next pullback, this will trigger a two-try rule failure. We teach all this stuff to our students here at School of Trade, and we will see price run back to the highs of this range. If the sellers can hold the next pullback, then the odds increase for a push down to the measured move and a test of the range expansion below. There's that spike in channel now. Boy, you guys are experts now on spike in channels, right? There's your spike in channel. Nice and easy, right? We rotate, but here's what I don't like about this. And again, this last night it was the gold, tonight it's the euro. This is the one that's going to throw you a curveball for tomorrow. What happened here? What happened right there? Look, where did that go? We just talked about this. Where did that go? It went to the base of that channel. Think about it. What usually happens on a spike in channel? We correct to the base, right? So now that leads us into a B, C, D measured move. So this is an example of a spike in channel, spike down, bearishness, channel out, break, retest of the baseline of the channel, right? Textbook. And then it makes a new low. Now that we have that follow through, we draw our measured move, right? The big measured move, and your target's down to 8,700 for all those euro sellers. But here's where I see the big problemo. We have what appears to be a range. It also could be in a little bit seen as a expanding triangle, right? See the expanding triangle? Break down, right? Look, expanding triangle, right? Higher highs, lower lows. That expanding triangle is just it's just a sexy looking range. Well, sexy for day traders, I guess, right? It's like we're talking about hard drives over here, right? Have you seen the size? Anyways, let's back to the plan, Joe. You're late here. So bottom line is, I know, right? I try to work on my night job, my comedy act sometimes with you guys here on this newsletter. I try to keep it fun, Nobody wants it to be boring. I've been working all day long. I want to have some fun with you guys too. Okay, so let's just say we have an expanding triangle. Expanding triangles are really rare. They're extreme volatility patterns. If you see an expanding triangle, range rotation, right? That's what you want to keep thinking. Buy those lows, sell those highs. Now that actually plays into a great setup tomorrow, now where we have this low. So let's just say this is an expanding triangle. Let's say it's a trading range. They're both the same thing pretty much. We go to the low of the range. If they can hold this pullback, we are likely now can complete that measured move. But this is where it gets interesting for those buyers. This is where, because we already corrected, this is the good variant. This is a really, what a great learning opportunity in this chart tonight. Because we've already corrected with that spike in channel, the door is wide open now for these sellers to fail. It is, right? We've already completed that correction. We already went up, took our profit, right? Went to the base of the channel, and now we're trying to finish off that measured move. Since we're experts now on the spike in channels. But here we are, right? We're down here now. If they hold that pullback, we finish it. If they don't, we now look at this as that wedge, and we go right back up, right, to finish the rotation back higher. It all hinges around the pullback right here, right? Because this is a range low. So if we get a range low that tries and fails, that's a two-try rule. Range rotation. Basically, if I'm rotating around, right, top to bottom, right, that's called range rotation. We try to go higher, give them two tries to break out. If they can't, we come collapsing back down. We go lower, give them two tries to break out. If they can't, we buy it back up. Remember, failures are the key for ranges. We're looking for seller failure to buy the lows right now. I have to give the bias to the bears because of the spike in channel, but that can change if they can't hold this pullback. Now you get a plan. Don't say I didn't warn you for tomorrow. All right, guys, I went a little bit over my time today. Thank you so much for staying late. Don't forget, join the free trial on our website at schooloftrade.com. Ask us a lot of questions, whatever questions you've got about our 3 levels of membership, about a trial, whatever the case may be. I've always got someone standing by out there on our live support. And don't forget, give me a thumbs up on the YouTube video. Send me feedback to JJ at School of Trade, right? Tell me how bad my jokes were tonight. I'm trying to have some fun with you guys. And come out and see me tomorrow. We open up our trade room at 8 o'clock Eastern Time. My name is Joseph. Be well out there. Be nice to each other, will ya? And I'll see you next time. Adios, amigos. Bye-bye for now.